Good afternoon. It is about 4:45 in the afternoon on Cinco de Mayo, May 5th, Tuesday afternoon. Interesting day in the market in the sense that it was a textbook picture perfect day for having relative strength, relative weakness plays, and also very, very clearly showing that you will get extra juice out of a trade when the market is on your side versus when it's not. So you can clearly see we came into the day, and let me just pull it up. These are the trades from today. So we're going to go over very briefly what we forecast. And yeah, I'm going to use a pretty strong word, forecast coming into the day of what we expected to have happen. We made note immediately that yesterday the market hit 212 and got rejected in a big way. So there was a little bit of penetrating the resistance about a week ago, tested it yesterday, and today we ended up getting followed through. And look at this trend to the downside, just absolutely amazing. And just to put it in a little bit of context, there is today's open. So we were pretty much below the open the entire day today, roughly $2.5 to the downside as a follow through. Now, if you are intraday trading and using much shorter time frames as your main bias, you're getting some trend days. I mean, we're getting some big green, big red candles. There is some scattered indecision in there, but it's the people that are trading on a little bit longer time frame where you just can't get a footing. You're just taking a lot of small losses and driving yourself batty if you don't have trades on both sides of the market. If you have trades on both sides of the market, like we're going to explain, and I shouldn't say explain, review from this morning, we're going to get into why we had opportunities. We weren't just sitting there looking for longs and blindsided by the longer term picture in the market, which clearly longer term weekly charts are still a nice uptrend, especially if you look all the way back there. I mean, pretty much every moving average is still above on the major indices. But we want to get into first, 212 was rejected. Again, getting into deeper technical analysis, you absolutely need to know whether or not what the significant reference point is. We also pointed out, this was pretty important to me, morning there were more short sales than longs. It was so much easier to find stocks to want to be short. And you can see here that the list of stocks on the short side was much, much bigger. Well, maybe not much bigger, but definitely bigger and easier to find than stocks to trade long. So that again, as we discussed in the morning meeting, set us up to say, you know what, there is a weaker bias in the market that you can't necessarily tell from the tape just reading the general indexes. We also noticed the retail and housing stocks are weak, as we had pointed out last week, and we'll just pull up Home Depot and Kohls just to give you an example of two of those. Last week we had in Home Depot a nice push through where the 20 finally crossed the 50, but more importantly, it was confirmed by price action with a flag. We had a bounce, and today we came into the day saying we want to be short, and lo and behold, a beautiful $1.50, $1.75 move depending on where you got in on the short side, and lows not as clean, but either way, we were still only looking to short side. So this 2-day bounce was a spot to look to sell short. And a huge key that we keep bringing up again and again and again is trading around a test of a 2-day high and a 2-day low. There's the 2-day high. Today and low is perfectly tested that level. We did not get there in Home Depot. It was weaker right out of the gate, which that alone should have told you that you would have gotten better follow through on that one. And as far as the retail stocks, we were talking about Kohls in the pre-market meeting, looking for some follow through. So we get a 2-day bounce. Indecision candle yesterday. Everybody knows by now I like to call that a melted candle. And then zooming into today, you can clearly see we trade right through the previous day's low right out of the gate. Maybe danced around it for about the first 15 minutes. But we get a really good clean push to the downside. If you were caught off guard by the speed of the move to the downside, nothing to worry about. You got a really clean swing high here that formed below the opening price. You got a real good entry point here. Shooting star and a swing high, and it's below the opening price, and you want to be short. Unbelievably good game planning there. 72.60 area. And again, we joked around about it this morning, but absolutely true. When you start to get your game plan unfolding exactly as you planned, and be bold to say this is what I expect to have happen, look what ends up happening. You get a nice dollar right out of the gate. So just looking at the retail and the housing stocks, even though the market sold off today, a lot of people don't understand trading the short side. That's okay. We can cover that in a little more detail in future meetings. But the market sold off, weak stocks sold off, and notice here now getting into the next part, financials were strong, and specifically we were talking about ETrade, and Schwab, and JP Morgan, and Goldman Sachs. We're going to take a look at those and see how they traded relative to the market. So you can see here, actually, JP Morgan, let me zoom it out to 2-day. JP Morgan actually opened, pushed, and had a nice push right out of the gate. Traded above the previous day's high. Did not stay above there. So our pre-market analysis of wanting to be long the stock was spot on. We had every reason in the world to see that. Just that the market in the afternoon especially got too weak. So this afternoon rally just didn't have the juice because the market was really coming in pretty hard. ETrade was actually a pretty good setup as well today. You can clearly, not so much awesome because of the indecision candles you're getting in here, but more so for this, if you didn't happen to be in the meeting this morning. Broke through that resistance level, which you can see pretty clearly, and flagging, pausing, consolidating, whatever you want to call it, it's outside the range, and you had every reason to expect follow-through. Out of the gate, we got immediate push-through, but again, look, 2-day highs, couldn't get through the resistance, pull back, get one more shot, and then the market collapses in the afternoon. But again, that's not the point. The point is we had a really solid game plan of what we expected to happen, and strong stocks did their best to follow through. The market just got hit hard. So when the market intraday is unfolding, 9:30, 9:45, 10 o'clock, first half hour of the market's out of the way, you're saying, what are my best opportunities to make money right now? Yeah, you absolutely could have been looking at these stocks long, but if the market's getting hammered and you have stocks in your game plan to look at on the short side, and we'll get again into H&R Block here in a second, you should be trading with the stocks that are trading on the short side of the market. I mean, there's really no other way to put it. In this case, the short side was better. BABA was discussed in the morning meeting as well. This 80 has been a big level. They got hit pretty hard overnight and got immediate follow-through right out of the gate. You would have expected this pullback here to follow through and push new lows, but we actually ended up getting a failed test. So how do you trade this? Well, I'll tell you flat out. You end up short selling this really clean hammer as well as what we call a swing high, and you look to get short here. What ends up happening is you don't get follow through, even though the market's collapsing at this point, pretty much all afternoon. We'll just pull up the SPY again real quick just to give you context. Really clean move to the downside in the SPY. How do you, let me go BABA. What would you have done here? Well, you probably would have taken a loss or a very small flat, if I could even explain that. You probably would have took a small loss. I mean, there's really no other way to put it. But this is the point. The point is it's a good sell short, a really good sell short. The market's getting hammered. The stock breaks through resistance support, gives you a really good clean entry. It's below the opening price of the day. Every reason in the world to short sell this, fully expecting for the stock to do this, go down and end up making new lows. It doesn't. So what happens is you end up losing money on a really good idea, and that's good trading. We've discussed it multiple times. You want to lose money on great ideas always. You always want to get out of a trade saying, I would definitely take that trade again. And this is just one of those trades. It was exactly what you're supposed to do. It just didn't follow through. So getting a little further into the list, I actually had Win as my best trade of the day, and I'm going to take a look at that in 1 second. But I also want to take a look at weak stock, weak close, and H&R Block. So we're going to take a look at Win first, and I'll explain why it was the best trade of the morning for me personally coming into the day, and why H&R Block was a good trade today as well, and how it followed through. So essentially, we're going to take a look at Win, which was a big dud, didn't do anything, but that's not the point. The point is, what is the trade scenario? The trade scenario is we fell down through this gap here, nice 3-day rally, looking for a sell short and a test of the previous day's high. Did not quite get up to the previous day's high, did sell off, and look, the market was getting crushed. Every reason in the world to short. Very similar to BABA, looking for a move to the downside and a nice trend, possibly retesting the previous day's low around 113.25. It just didn't do it. So you probably ended up losing money on a really, really solid idea, or maybe taking a flat, small loss, small profit. It's a great idea that didn't follow through, and you need to learn that terminology. So a very similar trade to the short side in HRB. And again, this is an armchair quarterbacking. This is from this morning. Where are we looking at right here? Weak stock, weak close, HRB in the game plan, and look at this beautiful follow through. So yesterday we get a really good, 2 days ago, we get a really good bounce into what was support, holds as resistance. Yesterday on Monday we get a really nice test of the previous day's high, have a trend day down, which is what we were expecting, and then today we were fully expecting follow through, and look at that, perfectly into support, but more importantly, you game planned for the expectation based on the bigger time frame, what it did yesterday over the last 3 to 5 days, and we discussed this in a lot of detail in the meeting this morning, and look at that follow through. Again, The fact that it's 80 cents is not the point. The fact that it did what we anticipated based on good technical analysis coming into the day, that's what matters. That is the only thing that matters. Because when you put yourself in a position to have conviction on what happens on the open, because you understand a deeper sense of what's going on in the price action, that's where the empowerment comes in to say, I belong here because I know what I'm doing, and that's what you want to get to. So when you start to set up days like this, 2 days in a row, and I'm going to end the video on this one here. A really solid bounce into a very, very weak stock. Okay, in this case here, we broke the neckline on a much longer term head and shoulders. So this here could technically be the neckline going all the way across as a much bigger level. So 2 days ago, or let's say yesterday morning, Friday we had a big day to the upside, but it was a big day relative to all of this selling pressure. We were looking for a test of the previous day's high. We got it and had a trend day down. Today came into the day saying weak stock, strong close. Weak stock, weak close, looking for follow through. So between Win and HRB, very similar trades coming into today, but Win didn't follow through. Big deal. HRB did. That's real trading. The bottom line is it's real trading when you make a good decision to put on a trade that doesn't follow through. One of them does beautifully, another one does nothing. That's real world trading, and that's what we want to discuss. We don't want to pick these Pollyanna stuff where I'm only going to show you the trades that work out perfectly. We're going to discuss the trades that we looked at in the morning, review them in the afternoon, and most importantly, it's not about whether or not we look like a genius. It's not about being a guru. It's about determining how do I set up trades that have the highest probability of following through the next day with a really solid structure that also has a good risk-reward ratio. Have a great night. We'll pick it up tomorrow.